to the Trading Market Technicals Morning Call video for Monday, November 25th. Another update in the markets on Friday. Dow Jones up 54, almost 55 points. Nasdaq up 22. S&P up almost 9, and Russell up 5.5. And quite frankly, this morning, while we're looking at the markets, even the S&P up another 6 handles. Totally lunacy in this market, guys. Market is totally out of control, running higher, and the problem is that everybody's trying to short the market at these tops and getting squeezed, covering the markets, and that's why you have this move higher. Now, over the weekend, we did get that Iran deal with the nuclear weapons. They actually postponed it, and I didn't read too much into it, but that sent the futures up a little bit, and obviously sent oil much lower, trading about $1.25 lower from the close on Friday. This has started from Sunday night. So we did get a little bit of pushback in crude oil. Now, is crude going to be a buy? We'll take a look at the charts. The bottom line is, how do you trade this market? Well, the first thing is you need to take a step back if you're not understanding how this market is working, or you're just too uncomfortable with valuations, too rich for your blood. Take a step back, try to pick the best stocks possible. Technically, we are technical analysts, so it really doesn't matter whether the trend is up or down, but we do need to know the warning signs, because a reversal, when you have these rich valuations, can be upon us at any given moment. So you need to be prepared for that. And how do you prepare for that? Well, we need to understand and look at our indicators and look at what's driving this market up. Is it for real? Is it just, buying from the Fed, which we all know what the real deal is in this market and how this market is at these levels. But we also need to be aware that we need to have our short list ready and available. And if you are looking for to short the market, believe it or not, there's a lot of shorts. Even if you're shorting relative weakness to the market, there's not a lot of quality setups on the short side. And I'll tell you why. I like to look for catalysts. If the market is looking to move lower, if the stocks are looking to move lower and we get a downgrade or we get our earnings miss, if it's a light earnings miss, more than likely the stocks will get bought up again. Because why? Buyers of dips are looking for the best possible entry on stocks that have moved lower and are at good entry points. That's fine. But even if you have a downgrade in the market, right now, everyone that I can see in the market are just buying anything outright. And that's a scary situation. And most of the retail investors are buying on margin, which is at its highest level since 2008. That's really, really scary, telling me that they're borrowing to buy stocks, and at these levels, no less. Not at a deep correction, but at these levels. And that tells me that that's a recipe for disaster. Don't know when it's going to happen. Could happen next year. Could happen 2014, 15, or it could happen in the next few weeks. I don't know. I am being cautious. I am a cautious bull at the moment, and I am trying to look for quality setups to the buy side. Hedging is perfectly fine in this market, because you can wake up one morning and be down 20 handles in the S&P and saying, why didn't I hedge my portfolio? That's another story. Again, you have to go by what your trading plan is. Okay, let's go right to the market. Bullish percent, SPX. As you can see, got our buy signal here, and we continue to run higher on the bullish percent. Now, I wanted to show you the NASI. Now, the NASI is on a sell signal, as you can see, and it's been on a sell signal. Well, Mark, why? Stocks are running higher. Yeah, stocks are running higher, but the indicator and momentum is waning. Momentum has been literally waning since all of 2013. Does that mean you go out and short the market? No. Obviously, you would have gotten your head ripped off. But we'll continually move lower. And this is a real good example for me. This indicator worked very, very well, picking bottoms and tops. Not that we do that, but just to show you, we want to get the meat of the move. So let's see what happens here. This is going to be a very interesting situation to see what does the market do. Does the market actually roll over, or do we get a crossover back to the upside? Now, if you look at the New York Stock Exchange weekly, it is also on a sell signal. Pretty interesting development. That's been on a sell signal for now going on 3 weeks. Now, this here has bottomed, this MACD, so we're looking to see if maybe we get a reversal in that. So kind of a mixed signal here. If you look at, this is the one I just showed you, New York Stock Exchange new lows. Hasn't broken down, but we're making new highs every day. So this is, again, telling me stocks are not moving. The indexes are moving, and if anything, stocks are moving lower, not higher. and I'm not saying all stocks, but if you look at the indicator, we're still here, stuck here in this range, and it actually ticked up 16 where the markets were up again at all-time highs. Let's take a look at the New York Stock Exchange new highs. If we were really ripping to the upside, the New York Stock Exchange new highs versus new lows should be at these levels, and it's not. Again, just another warning sign that I want you guys to be aware of. I'm not telling you to go out and short the market. We'd never do that. We're trend traders. We trade the trend. We're looking to buy quality stocks, buy them on dips, and hopefully that we continue to trend higher. Stocks above the 50-day moving average. Now we're at these levels, but not moving higher again. And these are perfect areas for a move lower. So my point is that you just got to be cautious because a lot of the stocks aren't moving. There are quality. There are a handful of stocks that obviously move higher, and we do have some sector rotations going in, which is good because stocks money staying in the market, not coming out of the market, and that's why you have these higher valuations. And what, I did a little search over the weekend. You have PEs north of 20 in the S&P. Those valuations are very rich. So just again, a word of caution. Here's the tick. If the end of the day tick should be reading up at these lofty levels. Should be reading above 600, and it's not. We're barely at zero. So again, something really to keep an eye on. Another thing, the VIX. VIX has been getting decimated, obviously, for 3 or 4 years, but we do have these little blurps back up again. Now we're back here. More than likely, if the S&P stays above the 575 handle that we're in right now, trading at 1807 in the minis, this thing should dip lower again, create another outside day close in the Bollinger Band. Okay, so just again something to keep an eye on here. It just makes me very nervous when I have stocks that are continue to move higher, and I don't see that in the indicators or in the stocks itself. Okay, so let's go into the couple of these sectors. Here's gold. Now, I think gold does go lower again, and I like to get it short up here. I'm not shorting gold here at all. I think gold is going to looking for a pop here in gold to get short. Okay, we don't want to take out this right shoulder, but anything in this 1300 area, 1280, 13, 1310, and then we get that reversal signal, then I'm going to look to short gold. Or I could short it up here as well, but I just don't want to take it out the right side. Okay, but right now gold to me would be more of a dead cat bounce play than anything. Take a look at USO. Now, USO, we're barely sitting on this bullish percent ENER now, and again, we needed to cross out this little area. I'll show that to you in the chart. We need to really take out this little cluster at 34.50, 34.40. That's not going to happen this morning. Crude oil is down $1.20 from the Iran deal. So that's going to actually get decimated again and probably come down to this 33.50. But again, I still think crude oil will bounce. We had some good plays in it. Again, I'm not in it, and I think that above 34.50, going to need to hold 33.50. So we got a dollar range in here, and let this work itself out before you get in. No reason to get involved in it if it looks like it's going to be moving lower. Okay, so now let's go right into the chart segment here. Here's the monthly chart of the SPY. What can you say? Breaking out yet again on this channel. And again, don't want to fight it. Let it go. And whether you think the market should be here or not, that's another story. But it's not going to pay you as a trader putting your thoughts in here. As much as I'd love to see the market move lower so I can get a little bit more aggressive to the long side, this is just not happening at the moment. So let prices tell you what to do, and leave your thinking, your thoughts about the market behind when the market opens. Okay, so here's the monthly. Take a look at the weekly. As you can see here, weekly chart, we are at these levels. We are extended. We all know that. We're at lofty levels. Now we're extended on the 60-minute, the hour, the daily chart, weekly, and the monthly chart. When you get all of that, that's telling you that markets are ready to move lower. Now, if you look at the pattern here, and here's the daily chart, we had literally 2 days. This is the third day, but we were down like maybe $3. Really didn't do anything. So we really had 2 days down, and now we're going to be 3 days back up again. And that's really what the pattern was. You had a couple of days lower, boom, a big blast higher. A key reversal here. We took it right back that Friday, and then we rallied again. So 2 weeks again straight up. And I do think, and I'm not, this is only, again, this is just me, but I do think This market is going to be in a herd of pain if this market continues to run up higher here with really nothing supporting it. Not looking to short the market. I would never look to do that. Other than a hedge, I would be hedging, no question about it. But don't look to go just short the market, because that's what's fueling the fire here to move this market higher. But when you just can't have a move from here to and straight, literally straight up. I mean, we've had a handful of days lower out of like 35 trading days. So the market needs to rest, need to digest. But what happens when people keep pushing the markets higher, eventually you're going to run out of buyers and the market's going to fall out of bed. And that's not what you want. You don't want to scare the people that are buying at these levels. All right, Dow Jones, same thing. These are the two sectors that are actually moving the markets, Dow Jones and the S&P. As you can see here, making new highs, all-time highs yet again. And really not much to say. Transports here kind of taking a little bit of a break, but still moving up into these areas. So we're still right up in here. Take a look at this channel resistance. We need to really clear this. Now, if the transport starts to go higher, and then we have the IWM moving higher, which the Russell 2000, good gauge of risk. Now we're back up in here. This actually, as you can see, is also taking a breather. So really what's moving is S&P and the Dow, which they're followers to the Russell and, of course, the transports and the NASDAQ. They aren't moving. But I will show you what is the XLF, the banks. Banks are moving, and I mentioned this way back here. I love this. I love the bank sector. Banks have been really kind of doing nothing all of 2013. As you can see, now it's starting to break out. I would be a buyer of JP Morgan, Goldman Sachs, and letter C, Citibank on any dip. This is rates are rising. Ben Bernanke cannot hold the bond market down. As you can see, he's having a tough time. Rates are rising, and if that's the case, banks are going to do very well. Even for the longer-term picture, even going into 2014, take a look at Goldman Sachs. And I mentioned here, way in here, I said, guys, keep an eye on Goldman. I think Goldman's going to make a run to the 170, and sure enough, we're 2 points away from our target. JP Morgan, beautiful. After that announcement that they settled on a lawsuit, beautiful run higher. Of course, it's overextended. We need the market to pull back into this area here. Let it come back and at least retest 50% of it. Let it get back to the 8 EMA. Other than that, I mean, we've taken out the highs. Great looking chart, very healthy. I like the volume on it. Let's get a pullback first before we look to buy JP Morgan. Same thing with Citibank as well. Here's the IGN networking sector. We're doing okay with that. However, if we take this out, then we look for a test of the right shoulder, which would negate this bearish pattern. And we have the Apple going into technology, really not doing much of anything. Again, keep an eye on for an explosive move. The Bollinger Bands are tightening and really looking for a move. We don't know which way, though, unfortunately, but it is building a lot of energy. All of November just literally stagnant here. So I think Apple's going to have an explosive move. Once it does break out, that's the side you want to be on. And lastly is the Qs. As you can see, Qs looking to take out the highs. Remember, we're up about 6.25 now in the E-mini S&P, and this week is usually a positive week. So I'd be looking to buy dips. I wouldn't be looking to short the market. Stay with the trend. Trend is your friend, and we'll see you tomorrow morning. Have a great day, everybody.